What's up YouTube, it's Louis here, hope you're all well. We're looking at Quant today on the daily time frame. We can see that I think we closed a little bit above $122. So it's just a signal, okay, this candle, we've got equal wicks on either side. I would personally call this a doji, it's a sign of a reversal. And when we see this at support or resistance, yeah, it's again, usually a sign of a reversal. But in this case, we're at support, we're at resistance. This candle is touching both this support and the resistance of the moving averages. So going forward, what is going to go on? What I would say is because we're currently at support, it's another sign that potentially we are going to try and break this 55 daily EMA. Remember, this is what we were talking about in yesterday's update. So 2 days ago, I made a video on saying potentially Quant and a lot of alts are a ticking time bomb. It doesn't mean that I don't believe we can go up in the short term. Actually, in that same video, I was showing you bullish scenarios where we could go up to $190 and yet still go lower. So when I say ticking time bomb, I don't literally mean we're going down tomorrow, okay? So, and then moving on to yesterday's update, we saw this bullish reversal, and we were talking about that in the Bitcoin and Quant update. More specifically in the Bitcoin update, if you haven't already, check out yesterday's Bitcoin update. We were going through exactly why Quant did actually go up to here. It's specifically because Bitcoin was showing signs of going up at around midnight the night before, not last night midnight, the night before. And yeah, overnight, if you spotted that through my daily strategy, which I teach you in the videos, but also step by step in the course, you would have been able to spot a nice trade by yourself over on the 4 hour and daily, off the daily close, but also on the 4 hour time frame. More specifically, I think it was this I've forgotten what it was on. Wait, what was the day yesterday? 13th. Oh no, it was the day before, wasn't it? I think it was this candle here. So on the 12th at around midnight, I think we spotted it on Bitcoin, to be honest, guys. Let me go over to Bitcoin for you. Okay, here we go. So Bitcoin, it was this daily candle on the 12th, and on the 4 hour time frame, we had this doji over here. And because this is a bullish signal on Bitcoin, this should essentially mean that we should see continuation with the rest of the coins. And then going back to Quant right now, that is exactly why, if we go back to Quant, that's exactly why from the 12th over here from midnight, it didn't lose this support. You can draw a demand box over here just like this. As long as you're closing above this wick, we're still holding its support. So in and around this red box, I want to see signs of a reversal. And what specific candlestick pattern have we been talking about? The doji today. And we see right down here in this double bottom, this W pattern, which I spoke about in yesterday's update with the title being ascending triangle. You got one right here, and we're coming into the 4 hour neckline right now over here. So the signal you could have entered this trade on would have been down here on the doji, because we're coming into this key support, this demand zone, and we're showing a reversal candle at support. And so we should reverse and go back into these EMAs. And so that would have been a nice trade off that 4 hour close, not even the daily close. So every 4 hours, you've got 6 4 hour candles in 24 hours. And yeah, back to the 55 EMA would have been a 4.5% pump, and up to here about a 7.5% pump. Back to the neckline of the double bottom. So without the pattern even validating, even breaking out, you could have entered it but on the second bottom, and that's just identifying a demand zone in the past where you heard this is a spinning top. So in the past, I've reversed over here, I've seen a reversal candlestick, and the same thing in the same location where you're not closing below that low. So that's why, yeah, we're expecting a reversal in this case. And the further identification was the daily close on Bitcoin being a bullish hammer, and then also on the 4 hour time frame after that daily close on Bitcoin, there was a doji at like in an also a similar location, double bottom, because again, everything follows Bitcoin. And if you can read the Bitcoin chart, which again I urge you all to watch out on the Bitcoin videos, because not enough of you are watching, and again, it's the most important coin. That one gave you the clue before the Quant chart actually gave you the clue, because this was here at 4 a.m. and would have closed at 8 a.m. So 8 a.m. GMT, you would have had to enter this trade. Whereas for Bitcoin, it was the night before. This was in the morning, this closed. And for Bitcoin, it was at midnight where it gave us the clue. So yeah, this is why I urge you all to follow the Bitcoin updates. Make sure you're liking that, sharing them for sure, because again, not enough of you watching. And yeah, that's just going to give a much clearer picture on the market. So I hope today's update has helped you guys so far. Please do smash that like button and share this video as well as the Bitcoin updates. Thank you guys for the support. Going back to this again, the doji on the daily time frame, as we're at support and resistance, is basically saying this can go either way. Okay, it can go up or down, we can break. However, because we closed above the support, I would suggest that it can be heading up again. We've spotted the double bottom over here, this smaller one, identifying that. We just seen that, sorry, on the 4-hour time frame, and we also identified yesterday this larger ascending triangle, which is also a double bottom. So that's why yesterday's title was a bullish ascending triangle. But guys, one thing we need to realize was, although this is setting up very nicely at the moment, we are still under the 55, we are still under this golden pocket. And remember, even though we might be seeing some bullish setups in the very short term, when we do get towards 140, anywhere between 140 and 190, this could be an area of resistance where we run into it and eventually get rejected. So we need to be very careful as we're approaching this. So this is why I made a video specifically titled, "Is Quant a ticking time bomb?" So just to clarify why, yeah. That's essentially, while we're under 126, we're not going to see this continuation to the 050 or potentially even as high as the 786. And remember, as long as you're below this high, any pump in towards there is going to be lower. Okay, we had this descending triangle, you had your low over here, and then we lost that and we made a new low. So any pump up, it shouldn't really be taking that out essentially. Do you know the Elliott wave theory? I'm not going to go into it too much, but you could say 1, 2, 3, 4. 4 should not go beyond that, and then 5 down. When you reach 5, okay, you can have a big boy bounce, and that would sort of mirror this fractal over here that I showed you guys in the other update yesterday. The other day, sorry, where we've just essentially taken that. We're saying that it doesn't have to mirror this completely. We could be yeah, it's just showing you the guys that eventually when you get down to this green area, it's going to act as support and you're going to have a bounce. And that would make sense with this potential Elliott wave count 1, 2, 3 potentially. We don't know where 4 is going to go, but it can't go beyond. It should not really go beyond the daily candle closes around 168. But yeah, forgetting Elliott wave, you can go to the 786. But yeah, technically, I don't use Elliott wave too much, but yeah, of course I teach it. And technically, Elliott wave 1 and 4 should not cross over. They should not overlap. And so that's why the expectation is we should be finding resistance at around the golden pocket to then get rejected and continue lower. But what's happening at the moment is we're currently trapped below this, and this could be a left shoulder of a larger inverse head and shoulders pattern. And remember, the Elliott wave count is saying around here we could be having a bounce. Why? Because this is where the left shoulder is. So even in the short term, I'm expecting a bounce. Even if, like later on down the line, we are meant to break it, I still believe that in the short term we will be ranging between 134 and 84, and that's what we've been doing since spiking down there, down to 86 over here. And that's why I'm basically telling you guys that ever since this spike over here, you need to realize this is a retracement and a reaccumulation, or just like refueling the rockets before continuation lower, you know, just putting petrol in the car. Honestly guys, there's no other way of saying it. Nothing goes up in a straight line, nothing goes down in a straight line. It's all step by step, and with such a big push down, I don't believe it's just going to be a massive push up back into the sky. I think we're coming up correctively, and that's what it's showing you guys, because it's been over a month now trying to go up and we haven't really gone anywhere, because since hitting the bottom you went to this price in 2 days. So you went down there in 1 day, the next day you're up there at 125. So you went from 85 to 125 in 2 days, and that was November the 15th, and we're December the 14th. It's been 1 month and we've still been between those two prices. So this is just clearly showing you that this is corrective. You made a high and you're just correctively coming back up to that high, and potentially going to get knocked down. Again, we can have one big momentum push again, as we've been explaining in today's update on Bitcoin, as well as yesterday's updates on Quant and Bitcoin. But again, eventually I do believe we'll get knocked down. If I'm seeing anything that proves otherwise, you know, potentially a higher low somewhere in this area, and we break through the golden pocket, I'll be the first to let you guys know of those signs. But to be honest, from a TA standpoint, from a black and white standpoint, this is the expectation. Push, exhaust, continue. There's a thing called a reversal wave, where you're meant to push, exhaust, continue, but instead of continuing down, you push all the way through here, hold it support, and then create the reversal wave. It's not what should happen. If I see the signs, I'll let you guys know, but the expectation is a lower low eventually. But again, I still do believe this is a fat area of demand between 75 and 95, and yeah, even though we've bounced off it once, I believe if we were to come down into it again, you have an aggressive bounce again. Thank you, God, because it's again confirmed support. Then we head to resistance, fail to break above the resistance, and then potentially head lower. Thank you guys so much for tuning in. If you want me to teach you this, the daily strategy, and the 4-hour strategy on how we spotted these trades and how to take them exactly, then please click the link underneath this video to take you to my Twitter, where I can actually personally give you a 50% discount on the course that will last until the end of the year. I can also give you a further discount on the mentorship if you just private message me over on my Twitter with the link underneath this video. Make sure you'll follow me over there, like, subscribe and comment. Check out those channel memberships, and if you want to send in a donation through the super thanks tool, that's right next to the like button. Cheers.